Ravi had just received his first salary after starting his job as a software engineer. Like many young professionals, he wanted to buy a new phone, travel with friends, and enjoy the rewards of his hard work. Before spending his money, he asked his father a simple question. "Dad, how can I make my money grow instead of just keeping it in my bank account?" His father smiled and pointed toward a busy shopping mall. "Imagine this mall belongs to one owner, business is doing very well, and the owner wants to build 10 more malls across the country. Expanding the business requires a huge amount of money. Instead of borrowing everything from a bank, the owner divides the company into thousands of small parts called shares. People buy those shares, and each person becomes a tiny owner of the business." Ravi looked surprised. "So when I buy a share, I actually own a part of that company?" His father nodded. Exactly. The stock market is simply a marketplace where people buy and sell ownership in real businesses. Every share represents a small piece of a company. When the company grows, the value of those shares can also increase. A few weeks later, Ravi visited Mira's neighborhood bakery. Her cakes were so popular that customers waited in long lines every day. Mira dreamed of opening bakeries across the country, but expanding required crores of rupees. Taking a huge loan seemed risky, so she decided to raise money by offering shares of her company to the public through an initial public offering, also known as an IPO. Thousands of investors believed in her vision and purchased shares. The money helped Mira open new branches, hire skilled employees, buy modern equipment, improve production, and reach customers across India. Within a few years, her bakery had become a nationally recognized brand. The investors who supported her from the beginning also benefited because the value of their shares increased as the company grew. Watching Mira's success inspired Ravi to begin investing instead of listening to rumors or following random tips on social media. He spent time learning about a technology company. He studied its products, management, profits, future plans, and financial performance before investing. Confident in his research, Ravi bought 10 shares at 100 rupees each. Months later, the company launched an innovative product that became a huge success. Sales increased rapidly, profits reached record levels, and more investors wanted to own the company's shares. As demand increased, the share price rose to 180 rupees. Ravi sold a portion of his investment and earned a good profit. Soon afterward, the company also announced a dividend, sharing part of its profits with shareholders. Ravi realized that investors generally make money in two ways. The first is capital appreciation, where the value of shares increases over time. The second is dividends, where profitable companies share a portion of their earnings with investors. He also learned that patience and careful research usually produce better results than chasing quick profits. One morning, Ravi opened his investment app and was shocked. His portfolio had fallen sharply overnight. Fear immediately entered his mind, and he wondered if he had made a mistake. After reading the news, he discovered that global markets had declined because investors were worried about the economy. Many people had started selling their shares. When more people sell than buy, stock prices fall. His father calmly reminded him the market reflects emotions every day, but great businesses create value over many years. A few months later, the same company announced excellent quarterly results. Profits were growing, customers were increasing, and the business continued expanding. Investor confidence returned, demand increased, and the stock price reached a new high. Ravi finally understood that stock prices move because of supply and demand. Fear and greed may influence prices in the short term, but strong businesses usually create value over the long term. 10 years later, Ravi met his younger cousin Arjun. Excitedly, Arjun asked, "Can you tell me which stock will double my money in 1 week?" Ravi smiled because he remembered asking similar questions when he first started investing. "The stock market is not a lottery," he said. "It is a place where people become owners of real businesses." Successful investing is not about getting rich overnight. It is about making informed decisions and staying patient. He advised Arjun to research every company before investing, avoid rumors, diversify investments across different industries, invest regularly, and remain calm during market ups and downs. He explained that trying to predict daily price movements is much harder than investing in fundamentally strong companies for many years. Arjun followed Ravi's advice. Instead of chasing shortcuts, he invested consistently month after month. Over time, the power of compounding began to work. His investments grew steadily because he stayed disciplined and focused on long-term goals. Years later, both Ravi and Arjun realized that the stock market is much more than numbers changing on a screen. Behind every share is a real business, with employees, customers, products, and ideas that help the economy grow. The biggest lesson Ravi learned was that knowledge is the best investment anyone can make. The more you understand businesses, markets, and finance, the better your decisions become. Wealth is rarely created overnight. It is built through consistent investing, continuous learning, patience, discipline, and allowing time to work in your favor. If you start early, invest wisely, and stay committed to your long-term goals, the stock market can become one of the most powerful tools for building wealth and achieving financial freedom. If you enjoyed this story-based explanation, don't forget to like, share, and subscribe for more videos on investing, personal finance, and wealth creation. Thank you for watching, and see you in the next video. If you found this video helpful and learned something new today, please take a second to hit the like button. It really helps the channel reach more people who want to learn about investing and personal finance. And if you're new here, subscribe and turn on the notification bell so you never miss our upcoming videos on the stock market, investing, wealth creation, business stories, and financial education. Thank you so much for watching and supporting the channel. I'll see you in the next video. Happy investing. Chart increasing.